Hi friends, and welcome back. If someone told you that the same tool would make you rich or poor, would you be interested to know what it is? That tool is called leverage, and it's one of the most powerful tools in finance, whether using in real estate or even your 401k. Leverage. But it's also one of the riskiest. And if you don't use it right, you wipe out faster than you can say margin call. In this video, I'm going to explain you what leverage is, how to use it, the upsides and the downsides, and how you can implement it into your life. So, if you're interested in building wealth, becoming financial free, into productivity and AI, then give this video a like and subscribe to the channel so you don't miss out on other videos. And now let's dive in. What is leverage? Explaining the mechanics. At its core, leverage is easy. It's using someone else's money to borrow money and then to increase the potential of your business or your investments by using someone else's money. Examples include buying a house with mortgage, taking out a business loan, or taking margin to buy stocks. Leverage is measured in a ratio 4 to 1, 2 to 1, 10 to 1. It's like borrowing €1 or dollar or pound and taking one of your own money, then it's a leverage ratio of 2 to 1. Or if you borrow £9, dollars or euros and just give €1, dollar or pound of your own money, then it's a ratio of 10 to 1. 10 means the general full amount of investment and 1 the amount of your own money. Why people love leverage. The positive side. Let's start with the good. Leverage, when used responsible, can be incredibly powerful. Return amplification. So, let's say you take 50,000 of your personal money and take out a loan of 50,000. Then you invest the 100,000 in the stock market and get a 10% return. The 10% return is 10,000 US dollars. But if your interest is just 5%, then you make up about 5,000 US dollars just by using someone else's money to invest into your portfolio, stocks, or investment idea. Access to bigger opportunities. So, if you want to buy a rental property or want to invest into a startup idea and you don't have the money yet, you might take out a loan and leverage your own money to invest right away and close the gap. Then we have tax benefits. In most cases, leverage has a tax benefit because you can take the loan and the interest and take it onto your tax deductibles from the taxes you usually have to pay. For example, you have to pay 5,000 US dollars into interest. You might can deduct this from your original income. That means that you don't have to care too much about the costs of the leverage anyways. Now, accelerate growth. You can take out a loan and leverage your potential by scaling up faster with money you don't possess at the moment, whether in a business or an investment portfolio. So your wealth trajectory skips ahead. And it's all about diversification. You can spread your money across multiple opportunities, not locking it all up into one investment by using a leverage into different buckets. The dark side. When too much leverage kills. Here comes the hard part. Leverage can absolutely wreck you. Margin calls and liquidation means if you invest and your investment drops, lenders can force you to sell your investment idea, your opportunity, your portfolio because they want to have more securities, even though you're just waiting to bump it up. And there is a debt trap. High interest debt or just a lot of personal loans might compound against you, sucking up income and destroying your future growth. And there is the cash flow stress. In business or in real estate, payment loans can become a nightmare and unsustainable if you don't have the right cash flow to fill the gap with interest and paid out loans. And of course, there's a psychological pressure. If you have large loans on investments, you might get up confused and scared to do the right decisions in your investments, whether it's in business, in startups, or your stock portfolio. Panic selling, cutting corners, and giving up entirely. And of course, there's systemic risk. Even large firms and entities cannot control economy, and waiting for the next collapse is the death to your wealth. Especially the weight of your leverage could cause a strategic damage on your portfolio and your wealth when you end up in a recession without full pockets of money to reverse your leverage. Leverage in action, a simple example. Let's make it real with a quick numbers example. Imagine you want to invest into a property to rent it out that's cost 500,000 US dollars, but you just have 100,000 US dollars and borrow 400,000 US dollars at 4% interest rate. The home value increases by 5% each year, and the rental covers your costs of the loan and your expenses. Without the leverage and just investing 100,000 US dollars in a smaller rental property, you gain up to 5% appreciation, and that means 5,000 US dollars per year. With leverage on the 500,000 US dollars rental property, you gain 25,000 US dollars by the 5% appreciation over here. Minus your interests and your costs of the loan, you're up by 16,000 US dollars net gains. That means you have a 16% annual return rate on your initial 100,000 US dollars by your own money. Now compare 5,000 US dollars without leverage to 16,000 US dollars with a leverage. That's a huge difference. That's a multiple of 3, and exactly that is the power of leverage. How to use leverage wisely. Leverage isn't bad, but foolish leverage is. Here's how to use leverage smart. First, know the true costs, including taxes, interest rates, maintenance, and opportunity costs. Number 2, stress test your scenario. What is when the investment drops by 10%, by 20%? Is there a margin call? What happens to your wealth and your gains? Number 3 is really important. Have a margin of safety. You should keep cash on the side just in case of downturns. Number 4, stay away from over leveraging. Keep your leverage ratio low. Staying within your risk profile is really important on investments in general. Number 5, keep your eyes open when someone is talking about flexible rates. Floating rates with changing interest rates and referring to a different new models that could change at any time is a no-go and a red flag for your investment. You should plan and have a strict plan on how to pay back your leverage. And number 6, keep profits separate. Don't try to reinvest your gains from your leverage into even more leverage. Keep calm and stay away from over leveraging and doubling leverage on your gains. Leverage outside money, time, and technology. Keep in mind that there are more leverage opportunities than with money. There is time leverage by hiring, outsourcing, and automation of your tasks with AI, with new employees, or different. And there is a knowledge leverage. Use AI tools, software, skills from your employees or other people to leverage your knowledge to become more successful and growth. These forms of leverage follow the same rules as financial leverage, but with a more less downside on a financial risk. Boost your impact with leverage on knowledge and time instead of just financial. Final takeaways. Leverage is both your best friend and your most dangerous adversary in finance. Do it smart. Use leverage to boost your growth as a tool with discipline and order. Don't do it blind. Avoid overreaching, complacency, and assuming markets always go up. When balanced, leverage can accelerate your path to security and freedom, but misused, it can force you backwards and even become your fall. And even faster than you possibly thought. So, I hope you now understand how leverage is used in finance, but also in time and knowledge, and you keep going on with growth and using new tools to become more wealthy, more knowledgeable, and more nice to other people. Hit the like button so it boosts this video towards other people to get known of leverage, time leverage, knowledge leverage, and financial leverage. And subscribe to the channel if you want to hear more about growth, financial freedom, personal finance, AI, and productivity. And tell me below whether you're using leverage and it's about financial leverage, time leverage, or knowledge leverage. Thank you for watching this video and see you in the next one. Cheers.